Yes. So we are pretty much done with national income accounting. We are in the last topic. We have dealt with some logical aspect and some, like factual aspect in the last few slides. Finally, we are coming to one aspect, like one important aspect, that is GVA or gross value added. So first thing we need to know is what is value added. I've already explained, but I'll explain again. So clearly, if you look at, there is a thread, there is a cotton, and there is a shirt. So essentially what is happening over here, sir? This cotton is being value added or some level processed, okay, to convert this to this thread, and this thread has been knitted, okay. There again it is value added to get to this thing. So essentially when you say value add means you will take the final output price of this shirt and you will remove the price of the cost. So the difference will be the value added. Essentially that is the GVA definition also. It is the value of output minus value of intermediate goods. But this you will do at an economic level for all the object and all the processes. That is why this is called as gross value added. That means you are not deducting anything at economic level. This thing you do, and this can be used as a proxy to national income and GDP to measure that what is how much output is produced. But this essentially is to analyze the output from the producer side, sir. Essentially because your focus is more on value added. Like generally GVA will be calculated sector level, okay, like agriculture, primary sector, secondary sector, tertiary sector. So at the sector level it will be calculated, sir. So one sec, at a sector level it will be calculated, sir. So it is more oriented towards producer side of things. So now we will be coming to first thing. What we'll do is we'll calculate GVA at basic price. But before going into this basic price, I want to explain a concept called as product tax and production tax. Actually basically product tax we have already seen. Product tax is nothing but, I'm just writing over here, product tax is nothing but tax which is imposed on a final commodity. Let's take this bottle, on the cool drinks, let's say it's a 20 rupees. On that GST is imposed as 5 rupees. That is the product tax. Like per unit I will be paying some tax, sir. Then what is production tax, sir? Okay. So product subsidy means, again, before going to production tax, I'll come to, product subsidy. So product subsidy means like on this bottle, again, let's say like 20 rupees is the cost. On top of that, 5 rupees is the tax. But suddenly, what government says is like, let's promote this product. So let's give 2 rupees subsidy. Essentially 20 plus 5, that should be the price. But because of subsidy 2 rupees, the price comes to 23. Okay, so that essentially that is called as product subsidy, per unit subsidy. Now what is production tax and production subsidy, sir? Okay, so production tax means, let's say to produce this bottle I have to set up a factory. So what will I do? I will be buying a land, sir. That means for land, what I have to pay? I have to say some duty. I have to pay some tax while registering that land. Essentially that is a cost. Like the objective is to produce this bottle. So that whatever land I'm purchasing, the tax that is partially also there in this bottle, sir. So that is my production tax. And the tax involved in the tax imposed on the factors of production, sir. Essentially it will reflect on the price. Similarly, production subsidy means subsidy given to the factors of production, sir. Like simply like sometimes they will be saying that land is given for free for this industry to promote industrialization, etc. So that is kind of subsidy. So these are production tax and production subsidy. Now with that understanding we will be moving into GVA, sir. First thing we'll be looking at is GVA at basic prices. So first understanding, okay, GVA we understood. What is this basic prices, sir? Basic price is that price level where apart from factor cost, factor income, you will be having you will be adding production tax and production subsidy. The effect of that will also be counted. That is the basic price. That means what to calculate at basic price, to count for production tax, you will be adding your production tax and removing your production subsidy. Okay. So apart from that, what are the other parameters? This you can pretty much understand why it is GVA. Like the GVA is nothing but C. C is called as what? Compensation to employee. Compensation to employee means what, sir? Wage only. essentially pre-tax wage. Okay, similarly what CFC? CFC is how much capital, fixed consumption of fixed capital, that is how much capital is used. So since this is for labor, this is for capital. On top of that, we are also adding, operating surplus and fixed income, which I have explained in the income method. So this is for my factors of production. Apart from that, to come to GVA at basic price, I am adding my production tax and removing my production subsidy to come to GVA at basic price, sir. So next we will come to other levels of GVA. So before that, GVA will be calculated 3 levels. One is basic price, which we saw. Apart from that, there will be, market price. So that will be your, GDP. It will become GDP at market price, that level. Next will be GVA factor cost. Okay, so we know GVA at basic price we have calculated. Now we will be coming to GVA at factor cost. So GVA at factor cost means what? I have to just only factor I have to conclude. That means what? I have to remove the basic price already does not have product tax. It only has production tax. I will be removing that production tax also from that, sir. So that production tax and subsidy. So essentially what? So GVA at basic price, I will be removing my production tax minus production subsidy. That will be removed. So essentially what will my formula comes to? Okay, so basically I will be multiplying this into the bracket. So this will be nothing but GVA BP plus production tax, production PRODN tax plus, here since this minus will go inside, minus into plus is minus. So I will be GVA into this thing minus production tax plus production subsidy. So so essentially what? To calculate GVA at factor clause, I will take GVA at basic prices, I will remove the tax and I will add the subsidy. So essentially that is what happening now. So then I will be getting GVA at factor cost, sir. So to put it simply, we are essentially doing the same thing, like what we did for factor cost and market price. So similarly for factor clause and basic price also we are doing the same. So to add to, let's take an example. We are moving from, this will be much clearer because you have already done. Let's take an example. You are moving from factor cost to basic price. That means what? You will be adding production tax and you will be removing production subsidy. When this thing essentially shifts to the right, what will happen? So you will be taking what? Factor cost is equal to basic price. My plus product tax, okay, will become my plus production tax will become minus production tax. My minus production subsidy will become plus production subsidy. So that is what I've written. So if you multiply that minus into bracket, you'll get this formula. So that is the GVA at factor cost. Last thing is what is the GVA GDP relation. So we have already seen GVA at basic price. In GVA basic price, what is missing? Production tax is there, but what is one thing which is not there? Product tax. That means from the gate level, if I am moving into market, what will be? I will be adding product tax like GST. That is one per unit I will put. Okay, that is product tax like GST. What will I remove basically from a market? I will be removing the product subsidy. So that is what I am asking. GVA at basic price, that I am adding my product tax and I am removing because essentially product subsidy will reduce my price. Product tax will increase my price. So I will be removing that. So that will give my GDP at market price. So finally we have also established a relation between GDP and GVA. So with that you will be understanding GVA at factor cost. From there you will be moving into basic price, then GDP at a market price, sir. So these are the various 3 levels. So you have understood that we will be moving into essentially sectoral competition, sectoral composition. So sectoral composition of GDP, nothing much is there to explain. So this is a factual slide to give the info and feel for it. So essentially service sector is the highest contributor of GDP, sir. It is 60% of 55 to 60% of GDP is from service sector. And primary sector is the lowest, only 15%, but still agriculture is important. Why? Because it employs more than 45%. So highest employer but lowest GDP contributor. Here itself you can understand why India has inequality, because the growth has not translated into jobs, sir. So that is a very important thing. And regarding the secondary sector or manufacturing, okay, so it has stagnated, sir. That is what we call as premature manufacturing. There is not much increase. So that is why government is bringing in plans like Make in India and other things to bring manufacturing. So it has stagnated at 25% to 30%. Just a query. I mean, I hope you know what is primary, secondary, and service sector. So primary sector is nothing but you just take the raw material and use it, or produce the raw material like agriculture. And your secondary sector, you do processing of the raw material like industries. Service sector is you provide service to these three things or outside. You essentially you generate service and help people. This is also called as tertiary sector. In case these are very basic social science, I hope in case if you don't know, I'm just explaining. Next, with the sectoral composition complete, essentially we have completed the GDP topic. But one thing which will be there in your mind is, we are coming to the last part. So definitely the one thing which will be there in your mind is sources. So what are the sources for economics? So here if you ask, I personally cannot suggest one book like say this, read this one book. Like polity has Lakshmikant, right? If you read Lakshmikant, then your syllabus will be covered. Definitely one book like that is not there for economics. I will list down what are the sources I went through, so you can refer those things. So some of the priority sources must read is definitely economic survey and budget, sir, which you cannot miss. Like budget, you can read any compilation of any institute. Okay, they will put economic survey. I would suggest reading the original document. If not, at least read the compilations. So that will give you a lot of insight. And apart from that, daily newspaper, a lot of linkages, like people will explain, repo rate, inflation, etc., and all those things. Newspaper reading for economics is must. Essentially, like Hindu editorial or any business page, they have explained logic. Definitely read it. So economics can be improved by only day-to-day reading. So these three are like must. Now coming to textbooks, sir. So if you come to textbook, what are the textbook one can read? So for that question, I personally looked into Shankar IAS economics book, and apart from that, Vision IAS economics notes. So not one notes is complete. So I looked into it, and apart from that, I have to prepare this lecture, I have taken my own notes from newspapers and my past year economic. Even you can see a lot of economic survey reference and all. So whatever my accumulated knowledge, I prepared this note. So in case if you are reading this, you don't have to refer those two books. But if you still want the satisfaction of referring to those two books, I would suggest those books. Now, apart from that, some of my friends, aspirants, they also look into a book called Shankar Ganesh. In case if you want, you can take a look into it. But economics, as I said, primary, these three are most important. Then you can move into, then you can, if you can couple it, essential means I would say these slides, and based on whatever I teach, if you can make a notes on those, and then read economic survey, budget, and newspaper, I feel that would be good for your prelims. So with that, thank you, and we'll meet in the next lecture. Please provide your feedbacks in comments, and please share this video if you found this helpful. Only if we get support, we can definitely expand and provide further lectures. It will definitely motivate us to provide a lot more content. Thanks a lot.